Capital Spectator had this interesting piece out. Early Q2 GDP nowcasts point to rebound for U.S. economy. I mean, they're essentially saying, Matt, after Q1's contraction in real GDP growth, we're looking at possibly not a contraction, I think is what they're saying. Man, now they're targeting kind of like on average. I mean, they're taking the average of like a lot of different forecasts, but they're thinking maybe around 2.6.
You know what? This is not the disaster that we've been hearing about. I think also it's important to take in a lot of different perspectives. What I'm pulling from this is, nowcast or forecast or whatever, or past cast, whatever it is, it's not saying that we're never going to get in trouble economically. But maybe when we're talking about Q3 or Q4 or maybe into 2023, if there is a recession or a downturn, it's not going to be as hard as people might have predicted.
Yeah.
But I think that's kind of what I got out of that, is that this kind of long-term thing that people, that's where the real danger zone is. Mm-hmm. And if it's lessened now, or if we're doing a little bit better now, I'd like to think that it's not that we're going to crash. It's that maybe we'll be able to absorb
maybe this soft landing that Jerome Powell is hinting
right.
at. That would be something. That's I guess in contrast to Goldman Sachs came out a couple days ago forecasting. Mm-hmm. They're forecasting a recession possibly in kind of the near future. But a lot of other folks are saying, okay, yeah, there's definitely the ingredients for a recession, but 2022, maybe not, maybe 2023. Mm-hmm. And I think maybe that's maybe some hedging of bets of it's harder to make a call in the short term, and it's a little bit easier to say like, okay, yeah, there will be a recession eventually, because that's kind of a truth. Yeah. But
there's always gonna be bad things that happen. Yeah. But I do think that there is also like a momentum to the economy. It's not like things just went out from under people, short of maybe some crypto and growth investors, but like it wasn't like the financial crisis where people were suddenly underwater in their mortgages. There's a lot of savings out there that people have that could also further cushion the blow.
Yeah. Now, what people are pointing to in terms of like things not looking great but not looking horrible is this looking at this economic momentum index, the economic trend index. And it shows a pretty, big decline compared to October 2021. Now, I think right now we're kind of at the kind of 65% threshold. And I believe 50% would be an indicator of a potential recession. And so it's kind of flattening out here, in the last month or so. But this is something we're going to have to watch because I wouldn't say it's completely dropping off, but certainly, the momentum, at least according to this chart, has declined. Yeah. And, looking at, this graph as well, again, it's the zero line is, potential recession. We're definitely on the downswing, but there's plenty of times where we've, for example, in the mid 90s where it's kind of come down quite a bit and then it's bounced back up. And that happened kind of in the last cycle as well, as we had kind of a big decline. This is probably like 2015, 2016. There's not an exact date on it. But then we recovered. So these indicators, they oftentimes don't work until like you're already in it. So it's you have to take it with a little bit of a grain of salt. But it's certainly something we need to keep watching out for.
I think these trends will continue, but maybe peter out towards a bottom rather than spiking straight down to a bottom.
Yeah, I think that's the case. Save some just black swan event, another one that we don't really know about.